Blackstone looking at a cricket league is peak private equity. They officially ran out of software companies to roll up.
Or they saw Apollo dropping $3.7 billion on a Japanese glass maker and realized the real yield is overseas.
Oh, please. Apollo buying Nippon Sheet Glass is pure currency arbitrage.
Did you even read the Tokyo governance reforms? It's a classic operational turnaround.
We'll fight about the yen later. First, I want to talk about this $2 billion check Gilead is writing. The rundown. So you're telling me Blackstone is looking at cricket. Actual cricket.
A global cricket league, yes. Institutional capital just cannot resist a sports franchise right now.
I love it. Put me in, coach, or whatever they say in cricket.
Wicket. I think you defend a wicket. Anyway, while the private equity guys try to understand how a match lasts 5 days, Veolia is out there literally buying dirt.
Ah, yes, the Australian PFAS deal. 220 million Australian dollars for a major soil remediation firm.
It's actually brilliant. Everyone is terrified of forever chemicals, but nobody knows how to clean them up at scale. Veolia is quietly cornering the physical infrastructure to fix it.
The ultimate unsexy cash cow. Just like Board Drilling dropping $287 million on a joint venture in Mexico for 5 premium jackup rigs.
Boring, dirty, but profitable.
Exactly. Speaking of profitable flips, Olympus Partners just agreed to sell the retina business of EyeSouth to Cencora, $1.1 billion.
Wait, really? Just the retina business?
Just the retina.
That's a massive carve-out. Cencora is a giant pharmaceutical distributor, so integrating a specialized clinical network is a fascinating pivot. I need to see the footnotes on that deal structure.
You always want the footnotes, but look at where the real premiums are right now. The whispers on Gilead and Ouro Medicines are getting extremely loud.
$2 billion for a clinical stage immunology play. The ink isn't dry, but they're clearly in the final innings of hammering this out.
They have to do it. Big Pharma is terrified of missing out on T-cell engager therapies. $2 billion is just the cost of entry right now.
Oh, come on. $2 billion for clinical stage? That isn't the cost of entry. That is panic buying. Gilead has a habit of overpaying when they feel their pipeline thinning.
I completely disagree. Like, you're paying for the platform, not just the asset. Autoimmune is the new oncology. It's a massive addressable market.
We'll see if the official confirmation drops tomorrow. I need the actual data before I buy your platform narrative. But if we're talking about massive markets, we need to look at Tokyo.
Oh yes, $3.7 billion.
Apollo going after Nippon Sheet Glass, roughly 590 billion yen in enterprise value. Let's get into why this completely changes the playbook for foreign buyouts in Japan. The big one.
$3.7 billion for a glass company. I love this deal. It is peak private equity doing exactly what private equity is supposed to do. Find an undervalued legacy asset, take it private, fix the operations, and flip it.
Hold on. You're making Nippon Sheet Glass sound like a distressed duplex in Ohio. This is Apollo's largest private equity play in Japan to date. We're talking roughly 590 billion yen in enterprise value. It's massive and it's complicated.
Exactly, and the macro narrative here is just beautiful. You have a historically weak yen. You have the Tokyo Stock Exchange practically begging legacy companies to improve their capital efficiency. Corporate governance reforms are finally giving global alternative asset managers a real wedge. Apollo saw the window and broke right through it.
Please tell me you didn't just make a window pun about a sheet glass manufacturer.
I'm an ex-banker, I can't help myself. But seriously, look at the multiples. Japanese industrials are trading at a huge discount compared to their US peers. It's a gold rush.
I'm not arguing the discount. I'm arguing the execution risk. You say fix it and flip it like it's a software company where you just cut marketing spend and tweak the subscription tiers. This is heavy industrial manufacturing. Glass furnaces run 24 hours a day. If you shut them down, the molten glass solidifies and literally destroys the equipment. The capital expenditures are brutal.
Which is exactly why you need an Apollo. They have the massive balance sheet to weather the capex cycle. Plus, who else is stepping up? The local Japanese buyers are way too risk-averse to carve this out.
I completely disagree. I think Apollo is taking on way more operational risk than the market is pricing in right now. I was digging into Nippon's latest quarterly disclosures. Their energy costs in Europe alone are eating their profit margins alive. Glass making requires insane heat. Heat requires natural gas. Apollo is basically taking a $3.7 billion bet on global energy prices stabilizing.
See, you always ruin my beautiful strategic narratives with your pesky supply chain facts.
Somebody has to read the footnotes, Nate. You get mesmerized by the glossy pitch decks.
That is fair. But the broader trend is totally undeniable. The analyst notes this morning are universally calling this a starting gun. U.S. megafunds are going to swarm undervalued Japanese assets this year.
I'll believe it's a trend when I see the actual financing structure. The regulatory filings in Tokyo should drop tomorrow. I want to see exactly how much debt Apollo is loading onto this balance sheet, because borrowing in yen is cheap, but cross-border currency hedging on a deal this size is definitely not free.
I'll be refreshing the Tokyo exchange feeds right there with you tomorrow morning. Speaking of massive numbers and pending paperwork, I'm hearing whispers about another $2 billion about to change hands.
Don't tell me Blackstone is actually buying a cricket league.
Oh, we'll get to the cricket gossip. But first, Big Pharma is writing big checks. Gilead is making a move. Voices? I keep reading these analyst notes on the Apollo deal. Everyone is saying Nippon Sheet Glass is proof that U.S. private equity is finally capitalizing on Japanese corporate governance reforms.
Oh, please. Governance reforms? That is such a polite way of saying the yen is weak and these assets are dirt cheap.
You don't think the structural changes in Tokyo matter? Come on. Apollo is dropping $3.7 billion here. 590 billion yen enterprise value. That's their biggest private equity play in Japan ever. You don't make that bet just on a currency swing.
I'm not saying currency is the only factor, but don't dress it up as some noble governance crusade. It's a classic value play. They saw an undervalued glass manufacturer and smashed the buy button.
Smash the glass, you mean?
Terrible. But speaking of dressing things up, what about this Gilead quote? Industry watchers claim their $2 billion move for Ouro Medicines underscores the intense premium on clinical stage immunology.
Translation: Big Pharma is terrified of patent cliffs and will pay literally anything for T-cell engager therapies. $2 billion for a clinical stage company. The ink isn't even dry, and my banker brain is spinning at that valuation.
It makes you wonder what else people are overpaying for right now.
Well, I heard Blackstone is evaluating a stake in a global cricket league.
Wait, really? Cricket?
Yep. From T-cells to test matches. Institutional capital has no boundaries right now.
I need to see the pitch deck for that one, but we should probably keep an eye out for actual filings tomorrow. I want to see the official Gilead confirmation before I believe that price tag.
Same. And I will be pulling those Tokyo regulatory filings. I need to see exactly how Apollo is financing this glass empire. Spill the tea. I just cannot picture Steve Schwartzman explaining the rules of cricket to his limited partners.
You really think he knows the rules? I guarantee Blackstone just looked at the broadcast rights multiplier in India and said, "Get me a team."
Look, sports franchises are the new software as a service. Highly predictable recurring revenue, insane customer loyalty. You literally cannot churn a fan.
You can if your team loses for a decade, but sure, Blackstone evaluating a global cricket league stake is peak private equity, having way too much dry powder.
Speaking of burning through dry powder, the whispers on Gilead are getting deafening.
Ouro Medicines, $2 billion.
$2 billion. For clinical stage immunology, I love it. Big Pharma is terrified of the patent cliff, and they're paying up for T-cell engager therapies.
Terrified is the right word, but $2 billion is absurd, Nate. Ouro does not even have commercial revenue yet. It is entirely based on a phase 2 narrative. You are paying a massive premium for a scientific hypothesis.
It is not just a hypothesis. The early efficacy data is great. $2 billion is the going rate for an autoimmune golden ticket right now. If Gilead does not buy them, someone else will by Friday.
Spoken like a true banker trying to justify a ridiculous multiple. I read the abstracts on their clinical trials. Promising? Yes. $2 billion of promising? Only if you are desperate to juice your pipeline before earnings.
Hey, desperation drives the best multiples. We should actually know who is right by tomorrow. The word is they are in the final innings of hammering this out.
Oh, a cricket pawn and a baseball pawn in the same segment.
I contain multitudes. We will be watching for the official Gilead confirmation tomorrow morning.
And we will also be digging into the regulatory filings in Tokyo to see exactly how Apollo is financing that massive $3.7 billion take private of Nippon Sheet Glass. Tomorrow's radar. I'll be refreshing the Tokyo exchange feeds all night waiting for the Apollo filings.
You desperately need a hobby. But yes, I want to see exactly how they're financing a $3.7 billion take private of a glass company.
The yen debt math will be fascinating. Keep your eyes on Gilead tomorrow too. Whispers are getting incredibly loud about a $2 billion buyout of Ouro Medicines.
Makes total sense. Big Pharma is writing blank checks for T-cell therapies right now.
$2 billion for a clinical stage pipeline? Oh, come on. That's pure FOMO premium. Show me the actual trial data before you back up the truck.
It's a land grab, Maya. You buy the plot before they strike oil.
I prefer buying companies with actual revenue. Speaking of weird plots, Blackstone is apparently evaluating a stake in a global cricket league.
Wait, really? Private equity doing cricket?
They're stepping up to the crease.
I can't even explain the rules of cricket, let alone model the cash flows. We'll figure it out tomorrow.